Hello, everyone. It's Mark here at TSLA, and unfortunately, Tesla closed in the red again today. The closing price was $242.65, which is a drop of $2.69 per share, and translated to percentage terms, it's a decline of 1.1%. Before we get into the charts, let's just take a look at the only real news that affected the price action today. There wasn't really any Tesla-specific news that was going to help or hurt Tesla's case. So that news is, of course, the PPI report. And PPI came in very slightly hot, and it really wasn't honestly that big of a deal. I honestly think most of this action has to do with the fact that the yields are still increasing on treasuries, and this is an options expiration day. So looking at this Reuters article, it says big tech losses sink NASDAQ, S&P, and U.S. Treasury yields rise. That these are all true things. They claim big tech was weighed down by U.S. Treasury yields. Semis post the 8th fall in 9 days. It's the worst week since April. There's a lot of worse weeks when it comes to tech stocks. Friday, indexes down Dow's up 0.3, S&P is down 0.11, NASDAQ is down 0.5%. And for the weekly count, NASDAQ's almost down 2%, and Tesla kind of fits in this narrative of tech stocks selling off and de-risking before the NVIDIA report at the end of the month, along with, of course, treasury yields going up. So the article says the S&P 500 and the NASDAQ composite fell on Friday and posted their second straight weekly losses on hotter than expected producer price data, and it pushed treasury yields higher and sank rate-sensitive mega-cap growth stocks. Now, yes, it's true. And we'll take a look at the charts, kind of comparing the inverse relation for the last couple of months with yields and with the indexes. Highlighted in this article, I highlighted the U.S. government reported that the producer price index climbed 0.8% instead of the expected 0.7%. And that, honestly, if you kind of dive deep into that report, most 40% of that of the advance in the PPI was related to portfolio management fees. Right. Yeah. So I don't really think the data from the PPI is necessarily affecting the price action all that much, when most of the advance is just people charging more to manage money. Anyways, so they talk about yields rising, and yields have been rising, and they talked about a hotter producer price index, and you'd think with higher inflation there would be more rate hikes in the future. But looking at the CME Fed Watch tool, which is basically tracking the probabilities for a rate hike in the September FOMC meeting, currently and actually today, the odds of a rate hike is very slim. We're talking 11%. And so what does that mean? If yields are increasing and tech stocks are going down because of it, but the odds of a rate hike are almost nil, and inflation isn't all that bad, if you look at the CPI report from yesterday, it really means that people believe there is not going to be a cut on the Fed funds rate anytime soon, and as rates stay higher for longer, that's going to really put a lot of pressure on a company like Tesla, who really needs rates to be lower to make cars more affordable if people need to get loans to purchase that product. Also, as yields, if the Fed's fund rate stays higher for longer, yields will also climb on the longer duration treasuries, as people have no reason to take a look at this. Okay, so if you truly believe that you can get a similar rate for a shorter term treasury bond or note or something like that compared to a longer term, why take your money, put it into some 20 or 30 year duration asset when you can put it into a 1 year, 5 year, 10 year asset and get your money back sooner, or even just a couple month treasury bills? And so if people can put their money into kind of a quote unquote risk-free asset and collect 4.5% to 5%, why would they be in equities? And also, why would they want to, if they can get that for a shorter term bill or note or bond, why would you put your money into a 20 or 30 year? And those 20 or 30 year or treasury bonds are, if you've ever heard of the ETF TLT, TLT has been under a lot of pressure in the past couple of weeks because people really believe that, rates are going to be higher for longer. And why would I want to put my money away in something that's going to get me 4% something? I can get that right now in a 3-month, 6-month, a 1 year, 5 year, a 2 year, basically shorter term bonds. And that's a good point. So, and we'll look at that relation between these longer term yields and the indexes so we can better understand why the stocks are moving the way they're moving. And another reason why the stocks are moving the way they're moving, I mentioned earlier, is the options action for a lot of the things that were expiring today. So if you're watching the Maximum Pain site and you're taking a look at the volume for Tesla's options expiring today, you would have noticed that this red peak and this spike here at the 240 strike for the puts was basically, it grew like 2.5 times. It was in the 100,000 area, and as over the course of the day, this bet, people were buying the 240 puts like crazy, to the point there's 308,000 of them now, and no one was basically buying calls. And that's not too surprising because the sentiment is pretty bearish. But I kind of want you guys to understand. So we know that Tesla closed at 242.50, right? So 242.50 is another strike for expirations for an option. It's in $2.50 increments for Tesla. And so we kind of know that the people that were buying the 242 calls were people that could move the stock. And the people that are buying the puts were probably just regular people, regular everyday people like you and me, trying to hedge our position, trying to short Tesla or what have you. But it kind of says something. 240 was never really threaded after the morning. And we'll take a look at the action in a second. But the 240 strike was never really in play at all. But yet it was getting bought up like crazy. But it wasn't Tesla wasn't like dropping to 240. It wasn't ever close to it really towards the end of the day. And so that kind of says a lot that the stock was being propped up. And that could be kind of worrying, right? Because if they were just only propping up, if the market was only propping up the stock just to avoid the 240s when there was hundreds of thousands of them, and get their calls in the money, that could be worrisome, because on a Monday, Tuesday, Wednesday, Thursday of next week, when there's no expiry trying to be avoided for some put, does the stock fall through the 240 strike because they're not worrying about protecting any puts they sold? So it's something that you kind of want to think about, because there was so much interest in the 240. I think that Tesla was floating above it considerably because they just weren't interested in paying that out. But what happens next week? Does there's no support at 240 then? Because if we look at the chart, I don't really see support at 240, but it was decisively. But to close above 242 is pretty decisive, because that's kind of closing above the gap. So before we move to the charts, let's take a look at the economic calendar for next week to see if there's anything important. Monday, nothing. Tuesday, kind of. It's going to be retail sales, and we'll have an idea how retail sales minus autos would give us an idea how auto sales are doing. Retail can affect some of the earnings as well next week. I think we have some retail earnings next week, but that's not really going to affect Tesla. Tesla's really moving based off this kind of de-risking of the AI bubble, quote unquote. I'm not calling it a bubble necessarily. But there's an obvious, like, I want to sell Nvidia now, I don't care the price. And you're seeing that kind of drag down Tesla along with that kind of stuff too. So we have import price indexes, not too important. Business inventories We know wholesale inventories are up. Business inventory is probably up too. Housing starts, building permits, XHB, which is the home builder sector, could be an interesting play for next week. Initial jobless claims. So, U.S. leading economic indicators. There's some stuff, but nothing necessarily too major to really worry about because we have enough to worry about with Tesla selling off every single day of the week. Let's go ahead and switch back to the charts and let's look at Tesla. Let's go down to the 1 minute time frame. And obviously none of these lines are really relevant anymore other than the fact that, we can fall through the gap next week with these purple lines. Let's go ahead and clear the drawings and just kind of get a better idea of where we're at. So, actually I probably needed the drawing to see the gap. Let's draw the gap back in with a rectangle. So this is kind of the gap in the bottom of the box is going to be the gap fill, and everyone's looking at that. We also have a gap down here that could be filled. I don't want that to be filled, obviously, but who knows, really. But as you can see, closing at this point was pretty important. We didn't really want to close in the gap. We also didn't want to close and close below a previous closing low, right? We wouldn't want that. So it's barely above the previous closing low, but we did make a new low and we got into the middle of the gap, and it's pretty concerning because usually we bounce from gaps only in a bullish context, and we are not in that right now. We're definitely making lower lows the whole entire time. But okay, so we saw that the 240 was touched earlier in the day, but towards the end of the day, we never really got close to it. But this got a lot of people excited for getting Tesla back then. People really thought Tesla would sell off again, but it didn't compared to some other stocks, I guess. And so like I mentioned, that's why I honestly think that the only reason why Tesla didn't sell off is because the vast amount of puts that were at the 240. Interesting enough, though, is like in the beginning of the day when Tesla was in this kind of 240 range, there was a lot of puts, but the puts over doubled when Tesla wasn't close to the 240. And you can kind of compare Tesla to the index. Let's just compare it to the S&P 500 to see if they had similar action today. And Tesla was just a little bit more volatile, but kind of generally trended in the same direction. S&P 500, much lower in the morning, had a bounce, sell off and a bounce, and just kind of grinded its way up very, very slightly. And Tesla was no different, really. So kind of the same. It just followed the index, and because of that, the action is pretty uninspiring, and it is just typical Friday action. So on Fridays, especially OPEX, basically if there's a lot of options closing, the movement of the stock would not be very organic. Like even if the craziest news came out today for Tesla, you'd probably see it sell off still just to make their quote unquote max pain, the max pain point actually hit. But looking at Tesla, let's add an indicator. Let's add the 50-day moving average. Do they have an EMA here? And we'll go to the daily. And as you can see, Lord have mercy, we're trading below most of the averages. And so the only hope you have is to have a gap fill and find support at the gap fill and maybe bounce back up and touch one of these moving averages. But otherwise, Tesla's just looking very bleak at the moment. And we can kind of understand. So when Tesla falls through these moving averages, especially the 9 or 20 or even the 50, it can stay below it for a considerable amount of time. Like when it passes through this red line, it continues to sell off pretty severely. When it passes through this red line over here, it just sells off pretty severely. And when it passes through the red line over here, even in before the run up, this was in spring, as it passes through the moving averages, it tends to continue that momentum downwards. And it kind of does that sometimes in a really brisk fashion, where as it breaks through the red line, this moving average, the sell-off happens within a week sometimes, and it just can't seem to support itself. Every time it does cross through, it sells, and it sells for a decent amount of time. This was like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is like maybe 2 weeks underneath, and this is just weeks and months, months under the moving averages. And yeah, it's not the greatest look. I know we've been talking about hedging. I keep, just in case someone new is watching, we've been talking about hedging Tesla since we gapped up, basically. And we've always considered this the beginning of the consolidation or topping pattern for Tesla. And this is so it's been 67 days, and we made a new low. Well, we didn't close at a new low, but we definitely got pricing to a new low in this gap, and it's not an accurate. Let me do an accurate measure of the range as far as top to bottom. So what is this, something like 20% top to bottom so far. And for new people, let's just kind of remind ourselves and understand what Tesla consolidations and ranging can look like. You could say this range was 84 days, and we're at 69, was it? And this was a top to bottom 40% consolidation. And how about before Twitter was purchased? We can say this was something like, we can say this was something like 71 days. So we're getting pretty similar consolidation time here. And that was top to bottom, 23%. So we're kind of in that area. This would be a very similar consolidation to that as far as length and the percentage ranging it does during that consolidation. It does break down from that, and it sells off a good amount, 20% on the first leg. And so even though, and you could say like, oh yeah, this is a big move, you're like, oh yeah, we already sold off 19%, like we're gonna get a bounce, right? No, Tesla can sell off a good amount. There's no doubt about it. There's no doubt about it at all. And if Tesla's gonna be like lumped into the AI movement, and I truly don't believe Tesla's in the AI movement. I really think the AI movement is centered around ChatGPT and Microsoft and the chip manufacturing for compute, and which is basically NVIDIA. I really think outside of that, there's no real AI play right now. We can talk about how people are developing things with AI, but there's even Facebook, they don't have, you're not interacting with AI like ChatGPT. You're not using AI to help you, do tasks. Their AI is their algorithm, which is very, very effective for their advertisers and recommending videos to people. And in Tesla's world, their AI is to help them train their full self-driving. But that's not the product that you're necessary and a lot of people are interacting with. It's a very small take rate compared to what it could be. And who knows what that would be. But I don't consider that part of the AI bubble. Yet we are lumped into it somehow, some way, and we might pay the price for it come end of this month. When NVIDIA reports its earnings, NVIDIA can have really great earnings and that'll help NVIDIA. But up to that point, which is, I believe they report on the 26th or something of August, what happens between now and then? Do we sell off to de-risk and Tesla goes along with NVIDIA? And we can compare NVIDIA real quick. I just wanted to show you how when Tesla does break through their moving averages, it's really, really brutal, really, really brutal. And it can stay under the 9, 20, and the 50 for weeks, for months at a time. And you can see it's very, very obvious. Every time it breaks through these moving averages, it tends not to bounce back immediately. It tends to stay under for some weeks at the very least. And let's try to find an example where it breaks through and we've been under for 1, 2, 3, 4, 5 days. Is there an example when we break through the 50 that we're somehow out of it within a couple days? So here we're under it for weeks, right? This is weeks. That's 44 days. Okay. So let's find another place where we close under the little red line. And this, oh my gosh, I don't even want to measure that. That's just like months. So that's probably like half a year. How about from these triple peaks? Let's see when we broke. Oh my gosh. So when you close underneath the, oh my, that's 81 days underneath the 50. Lord have mercy. 71 days under the 50. Okay, well. How about here when we close underneath the 50? This is very short. This is probably the shortest amount of time. That was 2 weeks. And then it broke out above pretty decisively and then immediately fell back into it and then was under, gosh, and was under for that 60 something days. Back in the day, we can see, let's see, closing under the 50 here, and it doesn't get out for 56 days. And remember, these when they break through, they've already sold off. And so to give you maybe a good idea, so from this peak into the 50, that's a 14% drop. And then it proceeded then to drop even another 30%. It traded underneath the 50 for freaking 50 days again. Here, it was underneath the 50 for like 5-6 days, and they came back underneath it and then got back out. That might be your only hope that you can replicate something of Tesla's price action from freaking 3 years ago. But otherwise, when the 50 breaks, it's not a pretty look. It's really not a pretty look. All right, so let's turn off the moving average. Let's talk about how we all know NVIDIA's been selling off all semis. Like I mentioned in the earlier part of the video, semis been hurting for what, 8 out of 9 days now. Let's just humor ourselves. Let's compare NVIDIA to Tesla, and you can kind of see they're trading very similarly. You see that? It's kind of sickening, but we're moving and trading like NVIDIA. But I really don't think we are in NVIDIA play. And plus they're trading at a valuation. What is their PE, like 200? And what is Tesla trading at right now? I don't know, like 50. But we are subject to this price action from NVIDIA and the semiconductor names. Microsoft is doing that to a certain degree as well. But if NVIDIA continues to drag us down, then we're going to get dragged down pretty severely. And just know that, yeah, Tesla's been selling off and NVIDIA has been selling off, but NVIDIA has a humongous gap from earnings, like what, a 25% jump from earnings. And if it dips into that gap, we're talking NVIDIA into 300 somethings. And where does that put Tesla? NVIDIA is a big weighting in the NASDAQ. Microsoft's going to fall with NVIDIA. Apple has been falling too. I mean, let's look at Apple real quick. Apple looks terrible. Apple doesn't look great at all. This is how many days has Apple been red? Like 1 day it's been green, and it's been trading. Now, obviously, things have been pretty oversold for a lot of names. Let's look at the daily on Apple, and it's been pretty oversold. The RSI is non-existent. The MACD, it's not going to cross over anytime soon. And you see one green candle in the past past 8 or 9 trading days. It's been green once. How about the S&P 500? Let's just humor ourselves. The S&P 500. Do you see any positive momentum here? We have one green close in the S&P 500, the SPX, on Monday, and we have 1, 2, 3, 4, 5, 6, 7, 8, 9. So 8 out of 9, just like semiconductors, has been red. It's extremely oversold, but it has, on the RSI, it has a little bit more to go. Like it's at 43, 45. I can, what is a good bottoming signal with RSI? Something like in the 30s. And it's not in the 30s and hasn't seen the 30s for quite some time. But the 30s did mark a bottom here, and the 30s did mark a bottom here in the end of 2022, and this was in spring. That's not a great look. And yeah, so you can sell off for many days in a row. But let's just remind ourselves what Jackson Hole looks like, and we have Jackson Hole coming up again. Can we remind ourselves of what Jackson Hole looked like from last year? 1, 2, 3, 4, 5. 1, 2, 3. So 3 green days in from Jackson Hole. That was 3 days out of 17. Oh, that's not good. That's not good at all. That's not good at all. So I really hope that we are hedged. We talk about hedging Tesla a lot here. You might hear from other people that you can't really trade Tesla. You need to just buy and then just sit and hope that in 10 years it goes up 10 times. And who knows, it definitely might. But what does the path to 10 times look like for Tesla? And are you going to sit there and have all these resources at your disposal that you can make income with by selling calls against, or you can just buy or sell puts? But selling calls, like, people have been really burned by that during the run up. It's no longer the run up anymore, guys. It is not. And okay, so if you have conviction, and we talked about how to hedge the upside, but let's look at the chart again. Let's turn off NVIDIA. Let's look at the chart again. Did we really need to really hedge the upside all that much? If you would have sold calls in June on the 20th, let's say you sold an in the money call, let's say you sold a call for 275 and you held it for 2 months, you would be sitting pretty right now. And you would have sold, most likely would have been a very expensive call. You would have had a lot of great downside protection. You would be burning theta for months. And depending on how many shares you have, you can have been doing that for a large portion of your portfolio. Look, what I mentioned before, like, is if you can identify the trend, okay? If you can identify the trend, then you can safely, quote unquote, safely sell calls against your holdings. But it does take some active management. Like, you want to look at the stock consistently every day, every hour, whatever free time you have. This is a big portion of your investment, I'm sure, if you're listening to this channel, and it is mine. It's basically 95% of my holdings now. That if you have all that if you're just sitting there just doing nothing, you can try to make something from it when the things are looking very dire. Now be honest. Can you think of a catalyst that will beat the macro, number one, or just beat the idea, or can you think of a catalyst that you can sell that idea of the catalyst to an institutional investor? You hear all the time about, well, we're making a new factory in Texas. I mean, in Mexico, Nuevo Leon. Well, all that means to other people is that, okay, you're going to spend $1 billion making a factory. You're not going to be making cars from that factory for maybe a year and 3 months or so. So we can just wait. We don't have to buy stock now. We can just wait for a year and buy it, and buy it a couple of months before the factory starts making cars. And maybe we'll have a better idea of the new next generation vehicle, if that's worthy of our investment. Or you can tell people like, oh, energy is doing really, really great. But we also know that energy is really difficult to ramp. We're talking about the mega packs. We only have 2 factories working on that now. And sure, we're getting a lot of contracts for mega packs. We're selling, hundreds of millions of them. Sure. But this is a car company. And until you have like 6 megapack factories distributed around every continent in the globe, and you have the battery ramp up to match that, then okay, then you can talk about energy being a big portion of gross revenue. Maybe it's increasing the margins nicely, because we've seen margins increase for energy quarter over quarter. But we need more factories. We need more batteries, and we need to ramp up that production. And then we can talk about at that point in time. But would you want to buy the stock now? Okay, maybe miraculously, okay, there's a new factory making megapacks somewhere. I don't know. They make it in India or something like that. Okay, cool. Okay, so then you have 2 months to buy the stock, right? Like, you have 2 months to see the price action play out, and you don't have to dip your toes in right now. And there's very little convincing that would convince people to buy the stock if they're not fans of Elon Musk, and if you're not hardcore fans of Tesla, or if you're not a Tesla owner. Getting into the stock now, it's not a good look right? So the other catalyst, well, we have the Model 3 Highland, great. But what Model 3 Highland has going for it, we don't know. We don't know when it's going to be released. We don't know the pricing. We know it's holding back manufacturing possibility in Shanghai. Is it going to be made in Fremont? We don't know. We don't know what it looks like. We don't know anything about it. And if you were to release information about it, does that add value to the stock? All it is replacing the current Model 3, who doesn't sell as much as the Model Y, and the Model 3s have been discounted severely. So when the new Model 3 comes out, the Highland, does the pricing go back up pre-discount? And if it does, who's going to want to buy it when it's very closely priced to the Model Y? What about Cybertruck? Cybertruck's coming out. Sure, it's supposed to come out. The handover event is supposed to be in this quarter. But this quarter doesn't end for like 2.5 months. And a lot of people have been saying, oh, it's going to be in September. Okay, September, that's a month. So I can wait a month to buy the stock. Okay, cool. And the handover event doesn't necessarily mean mass production and delivery of said vehicles. Maybe a couple thousand this year is what a lot of people are saying, and a slow ramp up to, 25, 35,000 next year. Oh, so you're saying I have time to buy the stock then, right? Okay, so what are some negative near-term catalysts? Is that it's the unknowns of inflation, it's the unknowns of are they going to do a rate hike? It's the definite knowns that the yields are killing the economy. People are not investing into stocks. They're definitely having more opportunities in bonds for the short term, for something that's completely risk-free, right? Like people knock on bonds. Yeah, you can knock on bonds, in the beginning of this year when stocks were desperately undervalued. But now a lot of stocks are what a lot of people consider overvalued. And though there is a claim that bonds are also overvalued as well, and the rate should be, the bond yield should be 0.5% higher than they are now, but that's a totally different story. But there is pressure being put on in equity. So let's take a look at how is the 10-year, which is what a lot of people use to track the rates, 2-year or the 10-year. But let's look at the 10-year compared to the NASDAQ. So every time you see the yields peak really hard on the 10-year, you see equities kind of fall in relation to that. So this was in September, it peaked and stocks dipped pretty hard. This happened in October. This was pretty much the bottom for the stock market. But at that point, when it bottomed, yields were pretty high. And same thing happened in November. How about here in end of last year? Obviously, that was another bottoming for a lot of stocks out there. Not the semiconductors, but a lot of stocks did dip very severely. And the same thing in March, the spring of this year, there was quite a large dip, and that was matched with high yields on the 10-year. And yeah, the yields are moving up, and yields are still looking pretty bullish, to be honest with you. They're not even meeting the October high. And so does that mean yields have more to run up? It's very possible. So if the yields are going up to, what was the yield here? 4.3%. What is that going to do to equities? What if what some analysts say the yield should stop at, which is around 4.5%. If we see 4.5%, what does that do to equities, especially the NASDAQ and especially tech stocks? It's going to be really hurting. Here's the 30-year. In the 30 years, one of the bonds in the TLT ETF, the 20-year and the 30-year, these long duration bonds. And you can see even for the 30-year, as of the last year or so, like when it peaks, stocks dip. And then when it peaks, it also kind of matches the bottoming of stocks. This looks like a freaking, let me turn off the S&P 500. But you kind of got the idea that when yields go up, stocks go down. We can see that's pretty obvious. But let's turn off the S&P 500 and let's look at the yield. This looks like a freaking bull flag. And does this mean that we're going to see long-term bonds, long bonds, 4.4% again? What about 4.5%? That's going to be destructive to a lot of equity. That's going to be really destructive. So how do you hedge it? You can short TLT. That's not financial advice. But basically, you can just short your own holdings. You can sell by selling calls against them, right? Now, kind of begs a question. Let's look at Tesla again real quick. Kind of begs a question. Maybe we've been selling calls very conservatively. I'm not saying you have been, but maybe they have been too conservative. If we would have been selling at the money calls for the last 2 weeks, we would have been much more secure in our investment, ironically enough, because we would have been hedging them much more effectively. To hedge the upside to an at the money selling of a call could be rather difficult, because you can't really use a calendar spread all that effectively if the stock runs really quickly. Now, let's look at the indicators on the daily time frame. Everything does look pretty oversold, but the RSI, yes, it's in the 30s, but at 30 is probably a better bet on when you can say Tesla has bottomed. Let's kind of look at the RSI value for some near-term bottoms, basically bottoms in the last year or so. So when RSI is somewhere around like 30 flat, it kind of marks a bottom for Tesla. Though after, the selling of shares by Elon to secure the purchase of Twitter, you saw it at 17.5 on the RSI. You saw RSI dip into the 20s, the high 20s, here in May of last year. How about the sell-off from all-time high? Once again, it was 30 again. Here it was also 30. So 30 looks like a good RSI reading for a bottom. And you can see it here again in March 2021. We see RSI at 29, I'm sorry. Here we see it at 30 as well. And we also see it here again at 31. So that's marked some bottoms recently, like major sell-offs, and that marks the bottoms around 30. And right now we're sitting at 39.85. What does a 30 look like on the RSI for Tesla? The MACD it has a lot of room to go down. It's not curling up. It's not curling up at all. You can say the stochastic has been sold off pretty hard, but that can stay sold pretty hard. It's not uncommon like here to see it sold for months. Are we due for a near-term bounce? I mean, possibly. Like there was some buying that happened here in the gap, but you could also make the argument that buying in the gap was really just to affect the maximum pain on options expiration. Yeah, but so far not so great. There's not a lot of things that are looking great. But let's compare, like if you kind of play the market a little bit, like where is there strength in the market? Is there really a super dire situation in the market? Is this sell-off a rotation out of the AI? Like if money is not in NVIDIA anymore, like where is it going? Is it really going into bonds? The yields say no. I mean, the yields are going up and up and up. No one's buying bonds. No, I get it. The auctions were fine. The auctions did get bought up. I think there's a lot of foreign buyers in the treasury auction. So, I mean, people are buying, but they're not buying like hand over fist out of fear. They feel like it seems like they're waiting to get into bonds when they get to 4.5% on some of these longer durations. Someone's saying 4.5% on the 10-year. I mean, 4.5% on the 10-year, man, I really don't want to see that at all. We can say the VIX has been selling off pretty nicely. Typical VIX crush Fridays, right? The VIX was completely crushed. So that's one to let you guys know that even though there was a sell-off in the market, like we're not seeing 25 on the VIX, and the VIX did close negative 6% today. But let's look at Tesla. So people are getting out of Tesla. People are getting out of the AI stocks. And people are getting out of technology. Like, is it just a total sell-off? I'm not totally sure about that. Let's look at some of the staples of a recessionary trade, not a recessionary trade, but a sell-off type of trade. So when things are selling off, where do people want to go? I don't know. We've had some pretty depressed XLF. How about XLU, which is utilities? Let's look at energy. And look at healthcare, XLV. Is there any divergence here? Yeah, there's. Okay, so you can see as Tesla has been going down, every single one of these stocks have been going up. I mean, sectors have been going up. Obviously, energy has been outperforming severely. And which is interesting because when energy prices go up, it seems like EV cars would be more desirable, right? Well, in my mind, that makes sense. Even XLU, even though XLU did kind of sell off, it's found some buying in the past 3 or 4 days. But the thing about XLU, that was good during like the recessionary talks from last year. But utilities don't have a lot of cash on hand. They're like small caps, right? They don't have a lot of cash on hand, so they can be kind of affected by rates, and they have to beg their customers for more money when they want to increase their charging of utility prices. How about XLV? Healthcare's got a nice bounce going on. It is possibly gonna maybe make a new high and beat out the high from July. We've the XLV names like especially what was it, Eli Lilly, doing really good, and its other counterpart Novo Nordisk, basically the people who make diabetes treatments and weight loss drugs, they've been killing it. So looking at XLV and XLE energy, you're seeing a trade out there that is much stronger than Tesla. It's much stronger than tech, and it's a thought process for people that need to kind of hedge, who want to hedge Tesla. Maybe they're shorting Tesla on their own in their own portfolio. But how do you make a pair trade of that? How do you go long and short? You can look into any pullbacks on XLE, pullbacks on XLV for a long entry, perhaps. So I'm sorry, guys, things don't look really all that great. From the indicators, they look very, very bad. From just the price action, it looks very, very desperate. There's not many green days. We're in the gap. We got out of the gap. Nvidia feels like it still wants to sell off and drag down the rest of the tech world with it. Apple is not doing really great. Microsoft is not doing great. Then you could say how there's a lot of people saying that, oh, this is like a falling wedge, and this is going to get bought up because it's kind of respecting this trend line. And I'll show you this trend line. Maybe in your mind you see it kind of the same way as well, because it kind of matches pretty nicely. But no, just when it comes to any type of pattern, it breaks either way. Basically, when the pricing gets really compressed, like when the action is really tight, like it's getting to right now, unfortunately, all that move means is there's going to be an even more explosive move, and you don't know which direction that's going to be. Like, yeah, there are moves that this kind of flagging type of pattern would mean that there would be like a bounce. And what does that bounce look like? Let's just draw some new lines just for the heck of it. Like maybe back into the gap and then out, do a horizontal test, then out. Or you just break down, test the bottom of the wedge, and then sell off completely. But yeah, it doesn't necessarily mean this is a bullish. Like in a longer term time frame, yeah, like we're still kind of in a uptrend, right? Like if you look at the run up, we're not closing with new lows necessarily, but we're kind of right on the edge. And we looked at the moving averages, we're below most of that. So this is really make or break for Tesla. Like the pricing is getting really compressed. It's below its moving averages. Big earnings are coming up for semiconductors, and yeah, like there's not a good story for it. The only story going on in Tesla is Elon going to fight Mark Zuckerberg in the octagon somewhere. So good luck, everyone. Have a great weekend. And I hope Monday we see something decent. I mean, every rip has been sold. That goes from Tesla to the indexes. So just be careful out there. If pricing pops on Monday, like let's say it goes up like 2%, just know that when it gets to certain strike points, when it gets to like 245, when it gets to 250, you see sharp selling at those points, at just basically those round numbers, and just you can kind of understand, and it gives you a good idea where people are shorting And all right, thanks for listening, guys. Sorry for another red day.